Hello, it's Tuesday, September 24th, 2019. I'm Steve Houston with Compass Communications, and on this fall morning, I'm here with Joe Terrell and Company, and we're going to talk a little bit about markets and investing. And Joe, October's coming up, and October, the pundits tell us, is traditionally a volatile month in the markets, at least historically. But I want to talk about what's been happening recently. So we've had lower interest rates this month, spiking crude oil prices because of unrest in the Middle East, and continued global concerns about growth. And here in today's Wall Street Journal, trade dispute restrains global business. How do you see all this stuff playing in the markets these days?
Well, there's no question that the trade disputes are hurting business confidence all over the world. People are postponing purchases and some plans to do things while they wait to see, are tariffs going to stay the same? Are tariffs actually going higher? Or is there going to be some type of trade agreement and tariffs are going to disappear? And then also any talk by the current administration about they might introduce new tariffs on new countries. Some conversation about we may put tariffs on Europe because of their automobiles. All of that is bad for the world economy and bad for the United States economy.
Let's talk interest rates, and in particular, the leader of the European Union seems to have embraced a how low can you go strategy on interest rates, and he got quite a bit of blowback on that. What are your thoughts?
Very true. He, for the first time, got a decent amount of criticism, and the issue around the world, and this goes back to Keynesian economics, that it's going to have a major influence, has been if we lower interest rates, it will create a spur in the economy. And in Europe, interest rates are actually negative. It's done nothing for the economy. And Mario Draghi, as head of the European Union, to suggest that I'm going to drive rates even more negative, somehow that's going to cause people to go borrow money and spend it, and or businesses to borrow money and build new plant and equipment and hire people. It's absurd. So he did get a lot of criticism from people saying, what are you doing? You're actually destroying confidence of people who feel the rates are negative, that this is so unusual and out of the question, maybe I better not spend any money, I'm worried about the economy. Not to mention consumers who feel if I do spend money, it's going to have to be my principal because I'm making no interest and I'm reluctant to spend down my principal. So it's hurting more than it's helping. And the real problem with the European Union is their taxes are too high and their government regulations are too high. They cannot compete on a worldwide stage with Southeast Asia, with the United States, Canada, others. England, through Brexit, is trying to get away from them and join us because they realize you can't compete with the ridiculous government regulations and high taxes. So any effort to lower interest rates thinking somehow that's going to help the economy, as I say, you're doing more damage than good. And Mario Draghi did receive quite a bit of pushback from people saying you're going the absolute wrong direction.
Interesting. So next week we get into the fourth quarter and the stretch run for 2019. What are you going to be looking for that might impact how you manage your portfolio?
Well, one of the things we're obviously looking at all the time is the United States economy. And how well is it going to hold up in the face of business confidence being destroyed around the world by all the trade disputes before you even get to the Middle East, potential, I don't know what would be the right word, terrorist action, potential blow up in the Middle East.
Crisis in general.
Crisis in general. So we'll be watching the United States economy as closely as we can. And the other thing that no one's talking about, but we are watching very carefully, is what is happening with the rate of inflation around the world, and particularly in the United States. This will go a long way towards telling us how we ought to structure portfolios going forward into the fourth quarter. It's interesting you mentioned Mario Draghi got pushed back. In this country, Jerome Powell, as head of the Federal Reserve, lowered interest rates again and actually began to get a little pushback from some people suggesting there's no need to lower interest rates, and you could be doing the same thing that's happening outside the United States. You could be hurting people's confidence in the economy, and lower interest rates aren't going to do anything for the economy. And in addition to it, the potential, if there ever was a problem down the road, how are you going to use monetary policy to battle that when you've already lowered interest rates and you can't lower them anymore? So we'll watch to see what inflation is doing, because it is slowly picking up around the world, and it's definitely picking up in the United States.
Thanks, Joe. That's Joe Terrell, founder of Terrell and Company, independent wealth management with $700 million in discretionary assets under management. Joe, let's visit again in October. Hopefully it won't be a real volatile October as the pundits are saying it could be, but we'll just see when we get there.
Thanks, Steve.
All right.